Hello friends, how are you all? I hope you all are doing well. I am also fine. So students, today in this video of Ind AS 41, I am going to make you revise the agricultural activities. I will cover this concept in this video and there will be no parts of this video. I will revise the whole concept for you here. This is part 1. Part 1 means lecture number 1. As we have provided the lectures, we have divided the course into different sections and these are your class notes. First of all, we first studied concept number 1 and what all things we are going to cover in the Ind AS 41. And as I had told you that there are 3 major concepts in Ind AS 41 and we will be discussing them in detail. First, we wrote down the name of biological assets. Then we noted the name of agricultural produce and then we wrote government grants for agriculture. These were the 3 main headings that we discussed in Ind AS 41. What are biological assets and how is their accounting and valuation done? We had made 3 concepts headings. What is agricultural produce? How is its accounting and valuation done? And how is the accounting of grants done? Okay, then we moved on to the second concept and we started with important definitions. As you know, before starting in AS, we can't proceed with our discussion until you understand the definitions. In the definition, first of all, I had told you the meaning of biological assets. There were only 2 main definitions. One was for biological assets and the other for agricultural produce. First, I explained this definition to you, then I explained this definition. Then we moved to the accounting part and then valuation part. First of all, we covered the meaning of biological assets. I will start explaining it. When we learned the meaning of biological asset in class, I explained you in a very simple way that the meaning of biological assets is a living plant or living animal, plant, animal. These are the biological assets. And I mentioned just one small exception. What was that? That bearer plant is not included in the plants. Why? Because we studied about bearer plant in Ind AS 16 under PPE. So, excluding the bearer plant, we cover all the other remaining plants and all the animals under the Ind AS 41. A student also asked me on text that the Ind AS 41 is about agriculture activities and you are teaching the Ind AS. So, this is applied on either big companies or listed companies. Or if its net worth is up to 50 crores. So, this agriculture term is all about farmers and farming. How is it applicable on the companies? So students, we had discussed in class that big companies like Reliance have started to involve in agricultural activities. And they have made it their business on an extensive level. If any company is involved in agricultural activities and it is in compliance with Ind AS, it will have to work within the scope of 41. Ind AS 41. Let's leave that aside. Let me just revise the meaning for you. In the biological assets, one is plants, next is animals. The bearer plant is not included in plants because it comes under Ind AS 16. And then we had a discussion about the difference between a normal plant and a bearer plant. So I had explained you in a very simple way that if a plant, listen to me carefully, if any plant provides you with agricultural produce, then it will be categorized as a bearer plant. If any plant itself becomes an agricultural produce, then it will be considered as a biological asset. There is a difference. If any plant itself becomes a biological asset, if a plant itself becomes an agricultural produce, then it is your biological asset. And if any plant provides you with agricultural produce, then it is your bearer plant. Or let's leave it. Let's take simple example of crops. In a farm crop, you sow wheat crop and cut it. Harvest is ready, you cut it. You sowed rice, the rice crop. Okay, the rice crop is ready, we cut it. You planted cotton plants, picked up the cotton swab and put in your bag and cleared the field. I am talking about the crops. You grew various crops and harvested it. So these crops, when these crops are ready, then they become the agricultural produce. Let's compare it with an apple tree, a mango tree, and an orange tree. So let's say there is an apple tree. You don't cut down the apple tree, but you take the harvest of fruits from there once in each year. When the fruit harvest gets ready, then you pick the fruit. So it is providing you agricultural produce in the form of apples, in the form of mangoes. Basically, it is providing you the fruits. It may either give you almonds or cashew nuts. And you all know their life is minimum 25 to 30 years if kept well maintained. I told in the class also that I also have around 100 acres of mandarins orchard. This is a hybrid of orange and Malta of Punjab, known as Kinnu, which is very popular in South India. I have 100 acres of Kinnu orchards. It has a life of 30 years and it took 3 years to cultivate and yield fruits. Orchard is ready, a caretaker is appointed. It will last you 25 to 30 years. So, when you cut down a tree you have grown, that is your biological asset. Literally, we don't cut down the trees. We take their yield, the fruits, and sell them in the market. The tree remains there. I had explained in a simple way, becoming an agricultural produce or providing the agricultural produce, both are different. Then I told you to take example of sugarcane. You cultivated sugarcane and harvested the yield. Rice, wheat, cotton, sugarcane, all of these crops which are cultivated, they are considered as the biological assets. The crops are harvested. Leave this, I gave you another example of tree. Suppose you planted teak trees. The cultivation of teak tree takes 15 to 20 years. You planted poplar or pine trees, they don't yield fruits. But it will take 15 to 20 years for the wood to be ready. That wood will be used in furniture at home or anywhere. After cultivating for 15 years, the tree is ready, you cut it. It is not giving any fruit, but you will get wood from it. So, all of the wood trees and crops that you have, all of these are considered as your biological assets. But all of your fruit trees, a tree which gives any fruit or any other agricultural produce. Take the example of rubber plant which gives latex. Life is 25-30 years. All the plants which are not cut down but continue to provide agricultural produce are bearer plants. They are treated like a factory. You have set up a factory with continuous production. You planted a fruit tree and it is giving fruits every year. We don't cut trees, that's like machine for earning money. Bearer plants come under the IND AS 16, but all the crops and wood trees come under IND AS 41. Then I told you about animals. Suppose you have opened a dairy farm and kept cows in it. You kept the cow for milk. If you open a poultry farm and keep hens for eggs. Or suppose you have created a herd of sheep to obtain wool. If you will raise all these animals, you can earn a lot of money. You should have knowledge. Suppose you have built a bee farm for producing honey. 4 years back, I went on a family tour to Phuket, Thailand. As true enjoyment is with family, I am a family man and I don't get involved in such wrong things. I always suggest you guys in class also to stay away from smoking and drinking. It is best to stay away from negative things as much as possible. These things not only harm physically but takes away the peace of mind also. You should not do it and not even think about it. Let's continue. I went to Phuket. I saw bee farm. It was a magnificent bee farm and they were producing a high quality honey there. Good earnings. If you know, these days cage free eggs are quite popular. If a normal egg is sold for 5 rupees, it is sold for 25 rupees. These hens are kept cage free in a poultry farm and they can roam freely in the farm. People prefer naturally obtained eggs. This business is a very large scale one. The mother dairy, they sell milk. Likewise, Amul also sells milk. They have come a long way. So it is a business which needs Ind AS compliance. So if you have cows, sheep, goats, hens, they all fall under Ind AS 41 because these all provide you agricultural produce. What did biological assets mean? So we have understood that biological assets means living plants and living animals which provides agricultural produce. Crops, woods, these all examples are written here. After that, cow, sheep, poultry, all of this is written. Bearer plant, apple tree, mango tree, and all the other fruit trees, these are considered as PPE and not as biological assets. I have made you revise all of this which is in notes. You can pause the screen if you want to read. Okay, now what did I tell you in the last concept? I had told when we do agricultural work to remove the produce from biological asset, we need to rely on some more assets. Suppose I want to do farming. For that I need land to grow crops or trees or anything. How would you do farming without land? So agricultural land does not comes under the Ind AS 41 because agricultural land will be categorized under the Ind AS 16. Okay, if I need instruments, equipment or a tractor and a lot of other things for farming, so they will come under Ind AS 16 as they are PPE. I will be talking about crops, woods and animals, but the other assets that you use to extract produce, they all will be deal in natural head. Let's say you have taken a license for farming or to build a poultry or for a bee farm. That license comes under Ind AS 38 as intangible. Any asset bought on lease will come under the Ind AS 116. I have made you write this. See this here. Following assets are not considered as biological assets. If any asset is used to obtain agricultural produce from biological assets, then such an asset will be covered under the natural head. If it is agricultural land, then it will come in Ind AS 16. Any other assets like tractor and equipments and like I have told you the bearer plants will also come under Ind AS 16. If there is a grant for a bearer plant, like the bearer plant comes in Ind AS 16, so its grant will also come under it. Any license will come under Ind AS 38 and ROU means right of use on lease assets, so it will come under 116. 116. We have done this. We have revised the first definition. We have done this and just revising now. We have done the first revision of biological assets which are plants, animals except bearer plant, the remaining assets in natural heads. Then we studied about a very important definition, the second definition. This is a very important definition about agriculture produce. Meaning of agricultural produce. What was the meaning of agricultural produce? Harvested product from biological assets, the product which you have detached or you have separated, which you have received from biological assets at the time of harvesting. I had told you the use of at the point of harvesting and I had taught this already. Just listen carefully as we are revising it now. The meaning of agriculture produce is harvested product at the point of harvesting. What does harvested product mean? To detach? For example, you took milk from the cow. Like we say, we have got the milk and we call it hand milking. I hope you know this. You must be wondering why a CA is discussing all these farming things. Anyways, you got the milk. So, the milk you got is agricultural produce. The milk that you got from the cow is considered as agricultural produce. But if you took this milk to your dairy and made clarified butter from it, or made butter and buttermilk from it, this product is obtained from processing it and does not come under Ind AS 41 but in Ind AS 2. They are processed goods. So, the product received or taken out at the point of harvest is known as agricultural produce. If you create anything after further processing it, it won't come under Ind AS 41. It will come under Ind AS 2 and it is the inventory. So, we have studied cow is an animal and its milk is an agriculture produce which comes in Ind AS 41. After this, other products obtained through further process like butter will be discussed in Ind AS 2. Amul milk, buttermilk, clarified butter is also available. Milk can be used to make things like ice cream. Let's take another example. I raised sheep and I obtained wool from the sheep. Okay, sheep and goats and wool. These come under the Ind AS 41. Now if you take this wool and go to the handloom industry in Ludhiana, you can make sweaters from it there and you can also dye it and can create different kinds of carpets. These processed goods comes in Ind AS 2. Understood? Look at this. This cow and milk comes under Ind AS 41. And butter, buttermilk, all these things come under Ind AS 2. We have done this in the class. And sheep's wool, carpets. Okay, consider cotton plants. So the cotton plant is a living plant and you have picked cotton from it. Raw cotton comes under the Ind AS 41. You have made thread from this cotton in the spinning mill, that falls under Ind AS 2, like picked cotton thread garments. These all come under Ind AS 2. So note that wherever further processing is involved, it will fall under Ind AS 2. Raw product in Ind AS 41. Suppose you have sugarcane farm, living plants of 41. Harvested it. This will also come in Ind AS 41. You took it to the sugar mill and it was processed to make refined sugar. It falls under Ind AS 2 and it does not fall in the scope of Ind AS 41. These popular teak and timber trees. You cut down the tree for wood, the tree fell down. The fallen trees, the scope of Ind AS 41 is still cutting of the trees. Now you took it to your factory and peeled it, cut it properly and made wood logs and lumber of accurate sizes from it. That does not falls under Ind AS 41. This all processing comes under Ind AS 2. When we shape something up, it is considered further processing. So you must know what all is covered in Ind AS 41. First, plant and animal is covered in it. And the second one is the raw output. The raw output that you will get at the point of harvest. It comes under Ind AS 41 and all the remaining one under Ind AS 2. We discussed about fruit tree. Suppose you have planted a mango tree. The mango tree comes under Ind AS 16 because it is a bearer plant. But when you will get the fruit mango, that is agricultural produce, so Ind AS 41. So the bearer plant comes under Ind AS 16, but its produce is agricultural produce. Mango tree, orange, etc. will be treated as per Ind AS 41 and its accounting will be done accordingly. This means plant and its produce will be treated as per Ind AS 41. Animal and its produce Ind AS 41. Bearer plant Ind AS 16 but its produce Ind AS 41. All the produce comes under Ind AS 41. I am not telling you anything new. We have spent a good amount of time on studying all of these in class. You guys forget after taking the class, and when you revise from notes again, you often wonder after realizing that we have studied this much. Everything that I taught in class has been written in the notes. As per the provisions, bearer plants are covered under the scope of Indus 16. But Ind AS 41 includes agricultural produce from all these plants. Fruit trees comes in Ind AS 16 and fruit under in AS 41 and processed fruit in Ind AS 2. The rubber plant comes under the scope of the Ind AS 16, but the latex that you will get from it will come under Ind AS 41. All the further products made from rubber plant will come under the Ind AS 2. These all is already known to you and we have studied it. We have already discussed the definition of biological assets and agricultural produce in class. This is nothing new, students. Don't think that I am explaining everything fast. I am just revising it. I am here to revise. I must have taught you something if I have recorded 4 lectures on a chapter. This trend of revisionary classes, that is not my style, as I prefer to teach and revise slowly with patience. Students don't prefer my slow teaching. Those who studies through my lectures watch at an increased speed, as I teach slowly, but my motive is to explain the Ind AS. The revision class is going a little fast. Those who have done the chapter can understand well what I'm saying. This class is not for learning, but for revising. Okay, next. Then we did third concept. Do you remember? First concept was coverage. And then the second concept was definitions. And the third concept is recognition rules. I have come on third concept. These are the recognition rules. Anyone? So students, listen to me. You can recognize biological assets in the balance sheet as an asset. Now what comes under biological assets? Plants and animals, right? So you can actually show any plants or any animals as an asset in the balance sheet, but only if it satisfies the rules of recognition. And there are 3 conditions mentioned. Condition number 1. Whether it is a plant or an animal, you should have an undisputed ownership, which in simple term means it should be under your control. If there is a dispute on land over an animal or a plant, and if there is a dispute on land, then the work you are doing on it will also be disputed. So you should have undisputed ownership. Then only control will be proved. Whether it's a plant or an animal, this should be confirmed that you will get some economic benefits from it. The economic benefits will flow towards the entity and the entity will receive them. When there is undisputed ownership, we take it. There should not be any sharing partner. There should be undisputed ownership and there should be some economic benefits. And the economic benefits shall flow to the entity. Now, the third is, there should be a reliable valuation of the asset which you have to record on the balance sheet. However, if you don't know about the quantity or worth of the asset, how will you record it? A reliable estimate could be of the fair value and for the cost. You should have the estimate fair value when the fair value is needed, and also you should have the estimate of cost when cost is needed. It means you should have estimate of the value. So if you meet these 3 conditions, you can recognize biological assets on your balance sheet. We discussed this in class, right? Now students, I have brought you to concept number 4, where our accounting part starts, okay? Practical questions are made. Accounting for biological assets. Biological assets includes 2 things, plants and animals. We started with the accounting for animals first. So firstly, accounting for the animals. And we mark this important. These questions might come in exam. RTP and MTP are also given. Step 1 is initial recognition. So students, the first step is initial recognition. What is the first step? The first step is initial recognition. When we start the animal accounting, I will not talk about plants right now. I will only talk about animals. When we start accounting for animals, the very first step is to purchase the animal. I repeat. The first step is to buy the animal. But animal breeding is also done. Please give me 2 minutes. I will come back to it. The first step is to purchase the animal. We call it the initial recognition. Many kids asked me about their doubts on initial recognition on WhatsApp message. And I was surprised because everything is written in your notebook along with the examples. So you don't study? If you read these clearly explained examples here for the first time, then you won't need to ask any doubt. In initial recognition, you have to pay attention for two things. First thing, acquisition expense. And when you purchase and bring an animal, you have to pay for their transportation cost. Did you understand so far? Because if you have to buy an animal, first you have to go to the market, then you have to buy it from there and bring it via some sort of transport. And talking about real and practical example, we see cows or buffaloes and other cattle being loaded in trucks in some other sort of transport, right? Sometimes we see the cages of hens, they are built differently. Whenever we buy an animal, there are many expenses involved. We'll have to pay for transportation, loading and unloading expenses, and pay brokerage to the broker. I had told you acquisition expenses. If you go to Ind AS 16 and see property plant equipment, or go to Ind AS 38, read intangible assets. All acquisition expenses are capitalized, but the Ind AS 41 shows differently and says to put it in P&L. No capitalization needed. The acquisition expense you spent, put it in the P&L. I explained the reason in Ind AS 41. It's a fair value model, and the fair value model clearly states that the money you spent on the purchase will not be returned to you. If you are going to sell the animal today, you will not get the money back because animal's price is same. You will waste your money. For expenses on acquisition, make two entries. First, acquisition expenses to bank P&L account debit, and other will be acquisition expense. It's over. Just put it in the P&L. The other thing is that we had the purchase price. I explained you very clearly that this purchase price is what the buyer gives to the seller. Let's say we bought an animal and we bought it for 10,000 rupees at purchase price. We gave the money to other person. Now don't think that entry is passed for 10,000. Animal to bank, biological asset to bank. Whereas Ind AS 41 states that you can't record an animal for 10,000 rupees. So first you should find out the fair value less. How much is cost to sell? Let's suppose if you are going to sell the animal that you have purchased today itself, and I bought animal for 10,000 rupees and I will sell it in market today. What will I get? It's Ind AS 41 model. What to do? Ind AS 41 says that fair value less cost to sell. I found out that animal which I bought for 10,000 rupees, and if I sell it now, I will have to spend 500 rupees. There were expenses to bring it home. There will also be expenses for selling it. You have to spend on transportation costs and on commission. Around 500 will be spent. Now its fair value will be 10,000. I bought it for a fair value of 10,000 with expense of 500. So you will get 9,500 net. So Ind AS 41 says that its value is 9,500 rupees because after deduction you will only get 9,500 rupees. This 500 rupees difference that is coming, right? This is your loss on initial recognition. Please pay attention. So The expenses you incurred on acquisitions are gone. Forget about them, but what you are buying, even in that, you will have to spend money. There are two expenses, while buying and while selling. The expenses for buying are gone and you should take the valuation of the selling expense as soon as possible. Therefore, when you will do the initial recognition of any animal, it should not be done on purchase price. It should be on fair value less cost to sell. You will need to find out the net fair value of the animal you bought and record it on the net fair value. Understood? Now you should make an entry on biological asset debit of 9,500 and a loss debit of 500 rupees. Okay, students? To cash 10,000. File the entries. Loss will be booked twice. Acquisition expense as well as valuation. Do the valuation today itself. This is model 41. Whole 41 works on the fair value model. So what doubts do you have? A student watched the class, studied the concepts and had no doubts. But after a year, when he revised, he asked, why are you writing expenses twice? He should read the concepts. Two expenses are recorded. One is purchase, that's paid in cash and gone to the P&L, while the other is a valuation loss. Okay? The animal you bought today, its valuation was done on same day. This loss is not being paid, it's a valuation loss. The animal you bought, now its net value is 9,500 rupees because there will be expenses in selling too. As I explained already, look, I gave you a proper example in class. See, I told you to write it in your notebook. I bought an animal for 10 lakhs. The acquisition costs have come up to 50,000 rupees. This will all go into P&L. This is confirmed. For fair value of animals on the date of acquisition, I purchased it today and its fair value today is 11 lakh rupees. You bought it for less. You got the 11 lakh worth of animal for 10 lakhs. You made a gain, and whether it's loss or gain, you will have to book both. If the value is less, book loss, and if the value is more, book gain. Let's leave it. Record it at the fair value but subject to the commission on the sales of 2%. No, it's actually 5%. Fair value is 11 lakhs. You have to spend 55,000 in commission. The remaining is 10 lakh 45,000. Now tell me, the animals you bought were worth 10 lakhs, but what is their fair value? 1045. So you have gained 45,000. Now I will record 10 lakh 45,000 on the animal, which is the net fair value on that. Now if you look at the answer. First of all, the acquisition expense will be 50,000. We have put it in P&L. Now we move on to the valuation, and the animals are debited at 1045, right? Payment was made for 10 lakhs with 45,000 gain, but 1045 is the value which we have to record on fair value. This is another example. See here, we have also transferred the gain in the P&L. Heard of gain on purchase? You earned 45,000 rupees gain on purchase. It is a net fair value model. What can I do? We have followed the rules. We are part of institute. If your commission goes up to 10%, then what would happen? Fair value was 11 lakhs and the commission goes 110, then remains 990. You will have loss of 10,000. Animal is 990. There was loss of 10,000 on payment of 10 lakhs. Gone to P&L, and these are notes on concept that we have already written. First I explained it with examples, then also wrote down the notes so you don't face any issues. The initial recognition of animals should be made at fair value, less cost to sell. Okay, students? It means that the purchase of an animal is irrelevant for the initial recognition. See fair value, not purchase price. The difference between fair value and purchase price on acquisition date will be considered as loss or gain. Is that clear? It's written, any expense incurred at the time of acquisition of animal, whether it be transportation, loading, unloading or commissions, all these will be write off in profit and loss. Mostly these expenses are capitalized, but now they will go in P&L. Every single point that I taught in the class is written down in your notebooks. Right, students? I don't teach anything that's not in notes. You write what I dictate. I don't teach from PPT, right? Everything is in your notebook. I made you pass general entries. First I gave examples, then I made notes and passed general entries. The first entry is acquisition expense to bank. Then animals debit, loss debit, gain credit to bank. All your entries are written in the notebook. Then I am taking you to the next step. Our first video is finished. Now this is the second video which is starting from here. Second video, subsequent valuation on balance sheet date. The animal that you had initially recognized, if it is still present with you till the balance sheet date, you will have to do its evaluation. So it is a very simple method. Net fair value, balance sheet date, take the initial, net fair value. Whatever the difference we will get, it will be a fair value gain or loss. We will put it in P&L. The fair value that you initially recorded and fair value from balance sheet date. So the animals will come in the balance sheet at a fair value. The animal you recorded will be at fair value in balance sheet. So the difference of the old and the current fair value will be put in the P&L. If value increases, then animal to P&L. If it decreases, P&L to animal. One more thing, I had told you that this fair value gain is not done in study mat questions. What does study mat do? It does not apply this concept in large questions. It ignores, but this concept exists. What was the concept? Whatever the fair value gain or fair value loss will come on balance sheet date, we have to divide it in two parts. One is physical change and the other is price change. It needs to be shown in two parts since these are the requirements for Ind AS 41. How do we divide? Suppose I bought this animal on 1st April 2021. I am preparing the balance sheet on 31st March 2022. So when 1 year has passed after buying, the animal's age has also increased. Let's say I bought an animal here. This is my acquisition date. At the time of purchase, the animal was 3 years old. But it became 4 years till the time of recording in the balance sheet. So how can you compare a 3 years old animal to a 4 years old animal? What you need to do is find out what is the value of a 3 years old animal today. Okay? So let's say I have initially recorded it for 10,000 rupees. Today, 3-year-old animal on balance sheet date costs 12,000. 15,000 total. So as you can see that there is a total gain of 5,000 rupees. But they say that since there is gain of 5,000 rupees, out of which the difference of 2,000 rupees, if we buy a same age animal today, how much will it cost us? I mean to say that the same animal that we bought when it was 3 years old. On the balance sheet date, the 3 years old animal is being sold for 12,000 today. So this 2,000 rupees is price change. And the remaining 3,000 rupees is a physical change because of increased age. The animal is 4 years old now. Its age increased by a year. The animal grew bigger, so its valuation went up. Naturally, larger animal prices are higher because its size and weight increases. So the fair value gain and loss on the balance sheet date was broken down in two parts, price change and physical change. They will go to P&L like we just showed in parts. The institute avoids this and gives the answer based on fair value in big questions. Often it doesn't give physical, price changes. And in some questions, we have solved answer keeping the ICI in front as an example. It's a concept. When you will do the valuation of animals, you should be careful about the age of the animal that is bought. Okay? Difference between the value of a same age animal today is the price change. Like it went up from 10,000 to 12,000, the 2,000 is price change. and whatever the balancing figure gain will remain, it will be due to the physical changes. Because the age increases, as discussed earlier, I had taken an example. I will read it. What example did we see? A limited bought 500 cows. This is an example that I created. 500 cows bought for 11 lakhs. At the time of acquisition, the fair value was 9,80,000. We recorded it in 980. The remaining 120 is loss, put it in profit and loss. We debited cows by 9,80,000, right? The loss is 1,20,000. Payment is 11 lakh because we do not see the purchase price, but the fair value on the acquisition date, and it is 9,80,000 which we have recorded. All the cows were 3 years old. On the acquisition date, the cow's age was 3 years, so we will look at the balance sheet date to see how much it is worth today, and it will be price change. But the rest will all be physical changes. Balance sheet date, the fair value cost to sell was measured at 12,60,000 for cows. Okay, my valuation came out to 12,60,000 and my initial was 980. So the difference is 1260 minus 980, that is 280, right? Any expenses? This is 280. So now we will divide it in two parts. One is physical change and other is price change. Physical change and price change. Now we will have to see how much is the price of a 3-year-old cow today. If we purchase cows of 3 years of age at the balance sheet date, then we would have to pay 10 lakh rupees. 10 minus 9.8, 20,000 rupees. Cows worth of 9 lakhs, 80,000 rupees. 3 years old has become worth 10 lakhs. So the price change is 20,000 rupees. Rest 2 lakhs 60,000 is physical change. See this 1260, 980, 280, and the price change is of 20,000 rupees. Rest is physical change. If you see entries, if you look at them, cows debit, fair value change of the price and physical change, it will be entered in P&L only. We have just showed. We showed in parts. As per the provisions of Ind AS 41, biological assets means animals should be valued at balance sheet date on fair value less cost of sell. There may be some difference between the net fair value at acquisition date and the balance sheet date. Such a difference should be treated as change in fair value and transferred to P&L. The following statement should be prepared. Fair value balance sheet and fair value acquisition subtract both, we get changes in fair value. Whatever I am saying here, this is all written in the notes and in the concepts. Then you need to separate the changes into two parts, which is price change and physical change. Price change is net fair value at balance sheet date minus net fair value which was recorded in the same age. Whatever is remaining, it is the balancing figure. After calculating the price change, physical change will be left, which is a balancing figure. This is the working. Then we solved question number 1. This is its answer. It was the same as the example we did. Then we solved question number 2. Calculation done. Then question number 6 is very important. It is marked. From November 20 RTP, it was solved in class. Question of valuation. After that, I did a special point in step number 3. It was accounting of calves. So, since this is a concept, we need to discuss it, but being a teacher, I feel a little hesitant to talk about this topic. We are talking about animals breeding here. We have a dairy farm with thousands of cows. The cow gave birth to a calf. The cow gave birth to calf, and we also have a horse farm. The animals give birth to offspring. When the animals give you calves, then you have to keep track of the calves. So, it is said here that when you buy an animal, it costs money and it incurs money. But if an animal gives you its young one, will that cost you? No, sir, breeding costs money. Breeding costs are incurred. As it's your acquisition expense, it will go to the P&L. Okay, cow gave birth to the calf. So its cost is zero. Its price is zero. So you can do its valuation and enter all of the amount in income. Okay, now you pass the entry as cow's account debit to P&L. It's 100% gain, sir. All the young ones of the animals that you get, all of them will go to the P&L at fair value. One more interesting thing I would like to tell you, when you'll do its balance sheet valuation. The cow gave birth to a calf today, which is 1 day old. You considered it as income and entered in the P&L. You'll do the valuation on balance sheet. When you do the valuation of calves, if we find the difference between the fair value on the balance sheet date and the initial fair value, that will be your fair value gain. The fun part I was saying is there can't be a breakup here. Price change and physical change cannot come, only physical change will come out. As price was zero. So entire gain is put in the P&L in the name of physical change on balance sheet date. So initially all will go to P&L. All that will go to P&L and gain that comes on balance sheet date will go to physical change. A newborn calf. Calf's account debit to P&L. As per the provisions, newborn calf will be recognized as an income at the time of its birth at fair value less cost to sell because it is not acquired. It means that it will be an asset without any acquisition price. Because we didn't get anything, our cost is zero. Then its balance sheet valuation will be done. Fair value minus fair value, and it'll be all physical change. There is no need to split the fair value into separate headings of price and physical change. All the details are in your copy, step by step, with examples, with questions. All of that has been written. What can I give you better than this presentation? I have one flaw in me. My only flaw is I can't teach you in shortcuts, because of which I have to face criticism. So what I believe is, child says make me a CA. The rest I will take care. Now if this child becomes a CA and he's called to the campus by a multinational company, or if someone asks a tricky question from Ind AS, how will he answer? Kids often think, why are they teaching us this deep and make us write so much? I teach it thinking that after becoming a CA, the child will get a good placement. I don't know which note, which point will be useful in their interview. Some criticize me for Inter as well. Maybe some kids watching this video might have studied in Inter under me. They know the accounting standards I taught them. When they go for an interview at any of the big four, they're asked questions on AS. Whenever you go to a good firm, they have good audits, all of them. They ask AS questions. There's no harm in knowledge, right? But not everything has shortcuts. A child claims to be chartered accountant, but he learned accountancy through shortcuts. Why did you choose to be a CA? It is a CA course and the child is neither ready to study FR nor ready to study direct text. Give me shortcut, please. Summarize it. Make a flow chart. You can't study this way. You have no idea what will you do after becoming CA when you don't have exposure. You learn from Ind AS. Whatever I'm telling you, learn to speak about this in public. Speak up in public. Speak at seminars. Speak up in CP hours, study groups, people will take notes. When you speak for 2 or 3 years, you'll stand and win the elections. Growth is somewhere, sir, but you will have to work hard. With shortcut, make me a CA, sir. 400 hours course, finish it in 200 hours because we lack time to study. That is the only flaw I have. Let's move on, okay? Then I made you all do. I am your teacher. That's why I keep saying, please don't get offended. When I can't make things clear to my own son, what can I say to you? I can only give my opinion, and it's up to you whether you accept it or not. I'm giving you my opinion, whether you agree or not is up to you, right? I can never force my opinion on you. I can only say from experience. Rest the things are such that you'll get it only with age. Yes, a guy used to say. I keep saying this even in the class. The kids get annoyed like, why are you giving so many opinions and why so much advice from you? We don't need this. Maybe 10 years later you will remember me, man. There was a guy who used to talk all this without a reason, right? So remember me then. Some things you may get today, some things you may get with experience of time. Yes, Jindal sir used to say this, right? Been a teacher for 2 generations. I've been teaching for 22 years. Students who studied in my initial batch, their kids are studying under me. I've become a 2 generation teacher now. Many years passed by, I didn't know. Then I made you do question number 7. It's marked important. It has the complete age breakup, animal valuations and everything. You can revise if you want. Second video is over. Then I came to the third video. This is our third video and I started the fourth step in it. Maybe if you remember, we started accounting of animals. The first step in animal accounting is initial recognition. The second is balance sheet valuation. The third is calves accounting. And the fourth is agricultural produce. When an animal, it gives you agricultural produce. You will need to pass an entry that day. You have to pass one entry that day. Agricultural produce is debited to P&L. Let's say a cow gives you milk. You will pass the entry as milk account debit to P&L. The amount of produce you get is your income. All that is your income, because whatever agricultural produce you get, it will all be sold in the market, whether it's milk, eggs or wool. So at the point of harvest, what you have to do is, all the agricultural produce you receive, you have to enter all of that in the fair value less cost to sell in the P&L. At the point of harvest, the day on which we will separate it, agricultural produce shall be recorded at fair value less cost to sell. Agricultural produce debited to income statement. This is the initial recognition. Now we are at the unsold inventory. It could also be that you have wool, eggs or milk. If you have stock of these items left, you got agricultural produce, but you could not sell it. It remains unsold. If it's unsold, then its valuation will come again on balance sheet date. So when its valuation comes on the balance sheet date, now 41 will not work. Now you consider that as inventory and apply Ind AS2. And what does Ind AS2 say? Cost or NRV, whichever is lower. Now you will say, sir, there is no cost. It is the one you had recorded initially fair value less cost to sell. Initially, this amount that was recorded. Now this will work as cost in Ind AS2. It's your cost. Okay, sir, simple. It's just the same fair value model. We initially recorded the fair value. Ind AS2 says cost or NRV, whichever is lower. You took the same old cost, then we are looking for fair valuation, but whichever is lower. When you had recorded it, suppose let's say we have a stock of 24 rupees. I have 1 liter of milk and it's 24 rupees. But when we looked at the balance sheet date, its NRV is 22 rupees. Which is lower? 22 rupees. Book the loss of 2 rupees. NRV is 28 rupees. Then we will keep it at 24. If there's a loss, we will book it. We cannot book again because cost or NRV, whichever is lower, is considered. This means that in the case of agricultural produce, gains cannot be booked. Only losses can be identified. As Ind AS2 works on the concept of prudence and we cannot book anticipated profits. Income can be booked once, which is at the point of harvest. But if the harvesting point is missed and balance sheet date arrived, then valuation will be according to Ind AS2. Okay, look at here. If any inventory out of agricultural produce remains unsold at balance sheet date, then its valuation will be made as per Ind AS2, cost or NRV, whichever is lower. Okay, the value which was initially recorded at the point of harvest will be considered as cost. The value which was initially recorded at the point of harvest will be considered as cost at balance sheet date. The initially recorded one will work as cost. The 4 steps that we read are about animals. Then I'll take you to the accounting of plants. Third video is playing now. Now see plants. Unit 2 starts from here. Accounting for plants, we have 2 types of plants. One is crops and the other is woods. When we talk about crops, there are wheat, rice, cotton, sugarcane. So in crops, we sow paddy. We will wait for the time of its harvest. Why? Because we have to see the point of harvest. The crops are ready in 3 to 4 months at the time of harvesting, or we'll see when harvesting time comes. So when the crops are being harvested, that's their harvesting point. You have to check at that point, see how much is the fair value, less cost to sell. Pass the entry on that as crops account, debit to P&L. So that means the accounting for both animals and crops agricultural produce are same. The accounting is same for both. So the day when you start harvesting the crops, you should book as per the price on that day. And pass the entry as crop to P&L, crop to P&L, crop to P&L, nothing much to do. The accounting for the animals was high. We bring the animals and then breed them and get some calves. Then its balance sheet is valued. There is no problem with crops. Crops are just sown, that's it. Crops are sown. There is no hassle of buying, no hassle of balance sheet valuation, no hassle of calves. Here it's only about harvesting. So only the step of agricultural produce is required in crops, nothing else. We will follow the same rules as we discussed in step 4, unit 1. Okay. No new concepts. It means that accounting for crops is similar as for animal agricultural produce, as crops are agricultural produce too. But when we talk about wood, like the teak tree, poplar or pine wood, there is a slight hassle with this. So you need to follow these steps. We had a question in study mat. I made you do it in RTP too. So now in wood, let's say I planted a teak tree. You know a teak tree will be ready only after 20 years. It will take 20 years for this tree to mature. So Ind AS 41 says you should find out today that what will be the value of a mature tree after 20 years. After 20 years, what will be the value of a mature tree? I said a mature tree is worth 2 lakhs. Then tell me its present value today. I've calculated present value, consider it as income. What's the deal here? We'll explain. The crops get ready in 3 to 4 months. Time and value of money doesn't work here. But this wood will be ready in 20 years. So will you book the entire income after 20 years? No. You need to book something year by year, year by year. Okay? You need to book something according to the progress stage. I don't understand. We will tell you, just listen. Calculate the value of a matured tree which you'll get in 20 or 15 years. Based on its present value today, pass the entry. Woods account debit, wood tree account debit to P&L. Next year, what will happen to balance sheet date? So let's assume that I'm standing on a chair. I'm standing on a chair whose lifespan is 20 years. As of March 31, 19 years of its life remain. When we consider 19 years, PV factor gets strong. On the balance sheet date, find out the value after 19 years and calculate its present value. Longer the PV factors delayed, the weaker it will be. The earlier the stronger. Calculate its value by applying PV factor for 19 years. Book the fair value change on every balance sheet date, 18, 17, then 16. So gradually, what will happen in 20 years? You will be booking income little by little. By the time it matures, the income will be booked over the period as per the accrual concept. Look at this now. There was a question on this which we discussed in class 2. Initial recognition. At first balance sheet after cultivation. Calculate the present value of net fair value of a matured tree at the point of harvest and pass this entry. So what will happen on the next balance sheet date? We will calculate the present value of current balance sheet date, subtract it from old one. The change in the value will be put in P&L. This one will be entered in the P&L. As we move forward, the fair value will increase. So we will gradually add it to the P&L every year. We'll calculate the fair value for 20th year first, add it to P&L. Compare it to the 19th year's fair value to see the yearly change. Then compare the 19th to the 18th and the 18th to the 17th. As the PV factor strengthens, you will gradually notice a difference. Your income of 20 years will be recorded. You don't have to wait 20 years to see this. Not applicable for crops due to the crop cycle of 3-4 months. Will sow and reap same year, thus no use of time value of money. It's simple accounting. The crop is harvested and the income is booked. If you harvest the crop thrice in a year, book the income thrice. I told you all about the workings of plants. Everything's taught in class. Look at this question, it's done. Question 2. This is question number 2. Then we came to accounting for expenses. Accounting for expenses. It's nothing. The charges of crops, woods and animals are different. Fertilizer, seeds, pesticides, breeding cost, if any expense that you do for the maintenance of your biological assets. We feed the chicken with fodder and we feed grass for the cows. If you want good quality milk, feed the cattle with great fodder. So, any expenses that you incur for maintaining or growing animals or crops, all that goes into the profit and loss account. Whether it's your seeds or pesticides, your fertilizers or breeding cost for animals or their food cost, everything goes to the profit and loss. Should be charged to P&L always, whether it is for growth or if it is for maintenance. A man built a fish farm. You start a fish farm and the fish grows, their weight increases. When weight increases, you make money. This is fish farming. You put in small fishes. You feed them, make them grow big. When their weight and size increases, you sell them. It's a very good business. You understand my point? So the fish food and the medicines that you'll give them, everything is going to P&L. It's all about making money. As per matching concepts, it will go to P&L. Then we spoke about grants. So Ind AS 20 applies to grants. But if a grant is related to agricultural activities, it falls under Ind AS 41. There are two types of grants, conditional and unconditional. If your grant is unconditional, without any condition the government has given you, so you enter it in P&L. And if you receive a grant with conditions, you should amortize it according to the conditions. Look at this. Amortize these grants to P&L according to the conditions. And if there is no condition, you can quickly put it in P&L. You've studied this in Ind AS 20, how to amortize and enter in P&L. Accounting is same. We read one more point at last in concept number 7. We read this again. Record the animals at fair value. Calculate the valuation at fair value. Calculate the valuation of crops and woods at fair value. But I don't know the fair value. You don't know the fair value of animals. So here in AS41 says, if you don't know the fair value, then the purchase price that you have, record it considering as cost. If you don't have any idea about fair value, take the cost as fair value. Okay? Be careful about one thing. In accounting, if you have used cost instead of fair value, then accounting of government grants will be reviewed by Ind AS 20, not by 41. If you are working on a fair value model, then the accounting for grants will be reviewed by 41. If you are talking about a cost model, then it will be reviewed by 20. And in agriculture, cost is not considered, fair value is known. All the things are tradable in the market. You can't say you don't know the fair value. Auditor may question you if you are auditing an agricultural company and say you don't know the fair value. You will say, doesn't trading happen in market? Does it have any active market? Yes. Then find out and get back. If the things you are working on have an active market, then fair value cannot be missed. So the 7th concept is just theoretical, not practical. That's why in agricultural produce fair value is utilized always. I have told you all these things. Then what did I do? After this, extracts of third question was shown. How does the income statement and balance sheet look like? It contains all the accounting notes. It was a great question. I made you do the 4th question. Then question number 5 was given as homework. Explain disclosure. You can read the disclosures there for your understanding. Video 4 is here. Okay, question number 3. Then no concept was taught. Such a long question. Then we did 4th question. Such lengthy question. See here. Then Jindal sir said, best of luck. Thank you. I've revised all the concepts for you. Agriculture has been fully revised. 3 things are covered: biological assets, agricultural produce, grants. Biological assets include animals and plants, not bearer plants. There are 4 steps in accounting of animals. Initial balance sheet, calves and agricultural produce. In crops, there are only 2 types. We've only 2 types of plants, crops and wood. Wood was the main challenge. You need to calculate PV from matured trees and gradually upgrade it. Everything else was simple. You can revise this, you have notes. Thank you very much, take care. Bye bye, love you, God bless you, bye bye. After this, maybe I will revise you the Ind AS 33 of EPS. Thank you, bye bye.